Good afternoon. This is Rich Nelson with Allendale, covering the wrap-up comments here. Today's Wednesday. This is November 10th of 2010. Slight pressure from the overnights or from the outside markets with U.S. dollar trading a little higher here today. That really was not the major issue driving grains today, though. Losses across the board. Corn down 9.5 cents. Beans down 10.5. Wheat down 13.5. Looks like some follow-through selling from yesterday's lower trade for corn and wheat. Certainly was seen in all grains here today. Interesting to see that the CME announced that yesterday's corn trade, for instance, hit a brand new record, 762,387 contracts. That surpassed the previous record by almost, what is this now, almost 200,000 contracts. So quite a big jump from the previous record. Certainly underscores all the excitement that's in this market. Perhaps we're seeing some liquidation out of things here today. We will note that soybeans did experience some losses today, which they did not yesterday. Part of that could be attributed to the fact that the CME group did raise margins. Margins for soybeans, for instance, went from 33.75 to 37.13. That's for a single contract for a speculator here. So that's probably one interesting thing we can point out here. As far as the corn news today, South Korea bought about 158,000 tons of corn. Disappointing because the U.S. will only supply one cargo of that, 55,000 tons. You can argue that's a little disappointing here for corn. Over on the soybean side, I did note the margin information there, the fact USDA did, or I should say the CME group did raise margins for soybeans, soy meal, and soy oil. All those are probably a bigger issue here today than the China news. We did get news that China bought about 2 cargoes of soybeans and about 1 smaller cargo of soy oil from the U.S. here. As far as the wheat side, we can note with some disappointment that Egypt bought 235,000 tons of wheat today. However, U.S. only accounted for about 115,000 tons of that. Keep in mind this trade's kind of geared up on the idea that wheat demand needs to hold up in order to meet USDA's numbers. And keep in mind, yesterday in the report, USDA did not lower any demand numbers for exports. That was a surprise. So we're seeing here that the U.S. only got a share, not the whole amount, of Egypt's purchase. Probably is a disappointment here for wheat. In addition to that idea, we can point out that the forecast still shows 3 separate systems lined up for the plains here, bringing possible chances of rain between now through the end of next week here. So we can see that possibly some losses across the board here today will lead into a lower open likely here tomorrow. Then we'll have to see what goes on from there. As far as the livestock here, we will note large gains across the board for both cattle and hogs. Hogs up $1.80 on the December contract. Last trades on the cattle I have up $1.25. You can argue that some of this certainly is due to ideas that higher grain costs could influence some producer decisions. For instance, lowering marketing weights on the hogs and cattle as well, and certainly on the hogs, possibly reducing the breeding herd, and that would affect the summer of 2011 contracts. But overall, that may be a nice story to wrap around our heads here, but keep in mind we still have some short-term pressure for hogs. The fact that today's slaughter was 428,000 head, that's quite a bit, shows we are not dropping supplies yet. So I must make the point that we're seeing some rebounds here in the hogs without any changes yet on the supply front. So keep that in mind here. Over in the cattle, I mentioned $1.25 higher. Certainly the same story there. We've got a good futures move here today based on hopes and expectations with the corn. But as far as the actual action, we can't actually look at too much that's changed here yet. Wholesale beef down today, 56 cents for choice, 19 for select. On the cash cattle side, the talk right now is this morning, at least bids of 96. That's compared to last week's $98 trade. It appears steady at best will be the price for cash cattle here this week. As far as possible reasons suggesting the higher trade, we've got 3 things laid out here. Number one, corn. That's more or less more a psychological issue here right now. Second one, we can point out for beef, Obama is in South Korea. And keep in mind that South Korea has been a big plus for us in exports this year. There are hopes that his move out there and for his one-day visit will increase chances for getting that free trade deal locked up, and that may expand beef exports a little more here in the coming years. Third thing, there's a private study out by another industry source who evaluated these potential GIPSA rulings. Keep in mind, USDA wants to tighten up rules regarding the Packers and Stockyards Act, which is supposed to protect small producers. The industry is up in arms against this GIPSA proposals, and one industry source study suggested it would cost extreme amounts of extra cost to the industry as a whole. So keep in mind the trade is viewing that as maybe as a deterrent, and if these rules are proposed, we might see a possible shrinking of all beef, pork, as well as chicken producers here. So keep in mind that's one issue we can point out. But overall, lots of excitement here today. Tomorrow's probably the key day to watch here as far as the grains. Will they take a stand or not is the key question everybody will be watching here. As far as livestock, as I said before, we're making some great futures gains, but so far we have not seen near-term fundamentals change just yet. Keep in mind we'll cover all types of outlooks, cattle, hogs, as well as all the livestock or all the grains here at our annual conference in January. Get a hold of those tickets. They're going quick. Our number is 1-800-262-7538. Whether you need any help with tickets for the conference, marketing, or trading, be happy to help you out. This is Rich Nelson. Have a good trading day and a good trading week.